All right, good evening, everyone. Welcome to the Hurley Investments Market View Commentary for Monday, April Fools. And boy, it seems like the market is not fooling. All right, here we go, guys. What I'd like to talk about today is pretty interesting and going to be good, I expect. But if I was to talk to you and ask you what's happening in today's market, what would you tell me? What would you tell me? Going up? News driven and headline driven? Anything else? We have a Fed put in place. Man, I kind of see it hard to see them not raising rates again, if I can use a double negative. Anything else? I mean, if you were to ask me, I'd agree with you. I'd say, hey, we're bullish, moving back towards the all-time highs. Not there yet. Not there yet, but can't be fully confident, but it's still trying. Yeah, I mean, they're trying to get back to last year's all-time highs, right? I was going to say sometimes you have the perfect backdrop for the market, meaning waiting on the China deal, right? What else could I tell you? Fed no longer looking to raise rates this year. And for 2020, we only have a quarter point rate hike. And 2021, we're only looking at a quarter point rate hike. Growing economy, low unemployment. And it's funny because for us, we still have Disney, Apple, Micron, Under Armour, Baidu. Oh, what am I missing? Ford. Disney, Apple, Micron, Under Armour, Baidu, Ford. Thank you, Lee. For a couple people, FCX. What else do we have that those are the main ones that come to my mind. But Bank of America, thank you, Ida. That was it. And Zions. There we go. I don't know about AOBC. Yes, it can go higher, but since it switched to American Outdoor Brands Corp, let's take a look. Well, yeah, probably you're going to show me quite a bit of upward opportunity. Let's take a look. Well, definitely. Yep. Good call, Ida. So we have some of the stocks that we're in. Apple up to 228, Micron up to at least 60, 75, Under Armour to 42, Baidu to 288, Ford to 25, FCX up to 45, Bank of America at one point was trading up at 60, Zions Bank at 135, American Outdoor Brands Corp, I think we saw 31, 32. We still have a bunch of positions that we are in that have some significant upside opportunity where we've made some great downside movement. And a lot of people are asking me, well, what are you doing? You know, we just took some profit on some Apple long puts. We just took some Disney long puts off for a little bit of a loss. Really, if you're to ask me what I'm doing, I'd go all the way back down here to how am I looking to trade? And I'm going long for a China deal in the next earnings, which I expect to be better than expected. We're in a lot of stock ownership right now. We're in a lot of letting some things rebound and come back. Baidu has significant upside movement. But as it was mentioned earlier, I will still protect for earnings. For re-earnings, but it will be slightly out of the money put protection. Really, I'm looking to pull the trigger the day the China deal comes to pass. I will be adding long puts at the money to protect the 1 day 3 to 5 or maybe 6% up the markets might jump to. It'll be simple. It'll be easy. It'll be awesome. Again, Baidu is really being beaten up for kind of the same thing that you might see on Facebook. So I could also stick Facebook in here. Part of Facebook's issue, you know, people are posting some bad crap on it. With that said, you know, where do you draw the line on freedom of speech? I obviously would never post some of the crap that these psychos are doing out there and showing them killing people and so forth. But I'm not sure how you regulate it without infringing upon the freedom of speech. Excuse me. You know, I could do a mathematical justification why Disney should be at between 139 142. Apple should at least be in that 250-ish range. I don't have an explanation of Micron. Under Armour, though, I think could be closer to 35. Baidu should be able to retake the highs at 288. Ford should at least be somewhere between $17.50 and $21. Facebook, highly valued, great opportunity. I don't know where to tell you they should be. FCX should at least be in that $25 to $27 range. Bank of America should be sitting at least at 35 to possibly up to 42. Zions Bank, I can make an explanation why it should be at 67 to 69. Outdoor Brands Corp, I haven't run those numbers for a while. But there's definitely some big upside opportunity in what we trade. And we've weathered some of the downturns, and we've weathered them quite well. So, an up day in the market, in all honesty, for me is more becoming a day off. Some people ask me, why don't I spread trade? And like my trade findings, right? Why don't I spread trade more in my bigger or clients' accounts? And the simple answer is because it is not money I can afford to lose. And neither is it for clientele. Most of my clientele is living off of this money. Most of my clientele is looking to grow over a period of time for retirement. I do have some people that said, hey, you can go ahead and spread trade a little more often, but I can't even spread trade all the stuff that I give you guys. I just can't. It's not available for me to do. So I don't. I do take advantage of some little ones, but I'll be honest with you. Spread trading works really good as you're following the trend. And when the trend breaks on you, it's really hard not to give up everything you made. Yes, you can adjust, but for the longest period of time, I've been able to get into a pretty nice home and protect my retirement money through collar trading. And it's really, it's boring, it's methodical, it's monotonous. And that's the way I have chosen to grow portfolios and to add shares over a significant period of time. Over a significant period of time, we will be able to add many shares. It comes back down to, in some way, shape, or form, I do think we have a horrific market crash on the future. I'm not going to be screaming or crying wolf, hey, it's going to come, it's coming tomorrow. I don't know when it's going to come, but we do have a pretty brutal market crash that should come sometime in the near future. It worries me. It keeps me up at night. People right now are so can't remember the word I came up with last night. Not content. It was a mixture between inexperienced, content. I want to say ignorant, but it's not ignorant. But for a couple people I spoke with most recently, they're so ignorant on market movement and market growth and protection that is about the best answer I have. And they will give up most, if not all, of their portfolio in our next downturn. And it's going to be a tough one. It will be a brutal downturn on the next downturn. Now, it's more than complacent though. Thank you for putting complacent in there. It's not just complacent though. There's some arrogance in, well, I don't need a money manager. Anyone can do it. I'm going to be fine. It's going to come back. I can see a guy right now who's telling me how I needed to be in, and thank goodness we didn't put him right in. But Apple's run for 10 years, and those are stocks I want to be in, so you're going to run for another 10 more. Probably not. And Apple came from 228 all the way down to 165. I collar trade so I can be wrong on guessing which way stocks can go. I don't consider myself smarter than the market. And I choose to trade in a way that's going to be, for all intents and purposes, boring, methodical, and it will take some patience. But it will also not allow your account to lose half of its value in a 20%, Dow downturn. On a 60-40 or a 40-60 asset allocation model. A 40-60 where you have 40% fixed income and 60% growth, that usually has between a 42 and a 48% downside risk. And I choose not to put people in that kind of risk. I wouldn't do to my own money, so I don't do it to other people. With that said, I think we're obviously bullish for the end of this week. New money's moving in at the beginning of a quarter. S&P is technically bullish. We have our crossovers down there on the MACD just barely, if I was to hone in on that. Same thing on the SPY. Same thing on the NASDAQ. And I guess I could go take a quick check. SPX, and let's move this out to like 1 month. Well, actually, they haven't quite crossed. Laying on top of each other. We do have our golden cross on the 5 and the 20. The NASDAQ composite. Haven't crossed as well. Do not have our golden cross yet. The Dow Jones Industrial Average. Come on. And that has crossed. So, boy, it looks like on the NASDAQ, though. I like the direction. We are getting to that oversold category. We'll see if we can't go a little bit higher, but doubtful. Golden cross on the S&P and the Dow. In all honesty, we're an announcement away or one headline away from saying, hey, we're off to the races for a China deal. Where we end April, I'm saying 2.5% because, and that's one other point I want to bring up, because it is okay or better to admit you're not sure where the market will go than blindly be led over the bullish cliff. If people were to ask me, well, where are we going to be 3 months from now? I would probably say lower. I'm right on the fence, though, of telling you it could be higher as well. We're literally right on the fence for going lower or higher. There's not an honest answer on where you can go. Hey, China deal, we're going to sell so much more. We're going to have balanced trade. I don't see it. Those numbers don't add up. I don't see it. Well, we're going to do this and that. Well, what is this and that? Again, the numbers for me as I work numbers don't add up. It's funny because I had someone ask me the other day, well, what numbers do you go through? And I go through world economic numbers and growth rates right now. Particularly, I think the risk is in Great Britain or England, so to speak. There's global growth risks really all across the board. There's not just one thing that I'm looking at. I'm looking at and trying to work numbers out for all kinds of issues per se that we can very easily run into. I'm reworking numbers for stocks, trying to figure out why Disney isn't going higher. What mistake someone has in those numbers? I run numbers on Ford all the time. Ford should literally be in that $17 to $22 range. It's doing everything right. It's actually taking its less profitable, historically less profit margin cars off the table. It's doing exactly what people expected an automobile company to do. Yet, well, if gas prices go up, then apparently Ford's going out of business. Well, I don't see it. Those of us that have gas guzzlers just cuss and swear at the pumps a little bit more, but it's not like we stop driving. Part of owning those kind of trucks is saying, hey, if the gas prices go up, we're going to pay through the nose, and we understand that. Not fun, though. I enjoy only paying $60 to $75 to fill up a truck. I enjoy paying less than $100. I do not enjoy paying $245, but that happens, especially when your gas gets out of control. So things look good. Earnings, not much going on this week. Economic reports, pretty impressive today, at least to a certain degree. Retail sales, horrible. Supposed to come in at 0.2, came in at negative 0.2. Retail sales ex auto, supposed to be 0.3, came in at a negative 0.4. Retail sales in March were awful. Business inventories came in at 0.8 instead of a 0.5. ISM manufacturing index 55.3 instead of 54.1, almost 0.8% higher. Construction spending 1.0 versus a negative 0.3. Kind of a mixed bag. Retail sales showed some weakness, but business, construction spending, ISM manufacturing, all pretty positive. Tomorrow will be interesting to watch the auto and truck numbers. Durable goods orders. The durable goods supposed to come in at negative 0.9. The durable X transportation is supposed to come in at 0.2. We got a 1% spread there on the durables. ADP, all over the board. Interesting to see what ADP comes in at. But more importantly, ISM services numbers. That'll be the big winner, right? Average work week at the end of the week should show a rebound after our government shutdown. So, when people ask me, well, why would you say higher this week? Really, other than Europe and a Brexit trying to get more votes through the system, pretty easy week. Nothing internationally. I was going to go through and look at it. Nothing internationally stands out to me. Manufacturing PMI, retail sales, nothing really going on. Come on. Great Britain Parliament votes on Brexit. EBC, Pratt's speech. Really not much going on. Nothing stood out to me. Our durable goods are most important. Wednesday, or is that Tuesday? When did I see that? Tuesday at night, calcium composite PMI, calcium services PMI in China. Not really standing out to me. More important things than that. Retail sales year over year, European Union, not much going on. Japan's not really relevant right now. Nothing to pay attention to. Nothing to worry about. Pretty easy internationally, to be honest with you. Again, when people ask me, am I looking to trade? Going long for a China deal, and next earnings I expect to be better than expected. I will probably put some out of the money, long put protection on. I'll go out far enough that I can create some bull puts, but not going to really cap very much. I thought it was quite interesting, and I found some interesting articles that I just blew right through there. 6 things successful people like Bill Gates and Jeff Bezos do on weekends to make their Mondays more productive. So over the weekend, some billionaires catch up on sleep. I bet I could catch up on more sleep if I had $1 billion sitting in the bank, right? They spend time with their loved ones. Okay, I can check that one off my list. I don't catch up on sleep on the weekends because I got soccer games and kids staying up late and all that kind of stuff. They strategize on the week ahead. I do spend about 2 to 3 hours on Sunday doing this. They make time for what energizes them. I probably can't say that I do that because I think, I think I'd like to do more me stuff, maybe some more golfing or fishing. But it's kids' time for me on the weekend. They take care of chores, definitely take care of that on the weekend. They set aside alone time and reflect. In all honesty, I do spend some, again, this is my Sundays where I consider I do this. So I kind of think I do about 4.5 of these 6. U.S. and China got into a trade war and Mexico won. Some pretty interesting numbers to look through on where Mexico is doing much better. Why, if President Trump shuts down the border, it could be really ridiculous. I had an interesting article that was emailed to me about Treasury tensions. Inverted yield curve keeps the mood on Wall Street subdued. I would just suggest you read through this. It is interesting. We do have an inverted yield curve. So sometime down the line, we're going to run into some issues. Interesting about elastic demand. Definitely read through some of this. Pretty impressive. And then I also had here 7 money mistakes millionaires like Warren Buffett and Bill Gates never ever make that the average people do all the time. They don't waste money on fees. Well, I still do pay some interest fees on things. They don't ignore their credit score. I keep tabs on my credit score. They don't spend impulsively. And I'd like to pretend that I don't spend impulsively, but I probably do make some impulsive purchases. They don't fall for marketing ploys. I do think I'm pretty savvy, if not downright anal in that regard. They don't try to beat the market. And I found this very interesting because I've always been judged about trying to beat the market. But I am moving more towards thinking long term. And I'm really doing whatever long term is into our next big market drop. Not a 20%er, but I do think we have a crash coming. They don't have just one source of income. I must admit, I do have one source of main income and a couple small sources of other income. And they don't keep up with the Joneses. I never thought I was one of these kind of people, and especially if you look at my neighborhood, they call my house the farmhouse. Here I thought I just arrived, the house of my dreams, some property, and people in my neighborhood call my house the farmhouse. So on these ones, I kind of think I fall into 5.5 because I do have two different sources of income, but none of the other two could replace the one big one. And in all honesty, it would not be fair for me to say I don't spend impulsively because I do. And I purposely, I do pay some short-term fees on some things, but it just seems to make sense to me. Don't run a credit card balance, those kind of things. So out of curiosity, if I was to ask you guys some questions, why don't you give me some feedback? What are you guys seeing? What are you guys worried about? What do you see on the horizon that's something that you might say, hey, Kevin, have you thought about this or are you worried about that? Otherwise, we'll call it a night. But any questions, anything you have that you want to bring into effect or ask me or something I haven't seen? Kevin, the yield curve is 100% predictor on a recession. What is the timeline? So, Rick, that's an interesting one because, and I may have mentioned this 3 or 4 weeks ago, that's kind of a false indicator because sometimes it happens within 2 to 3 months, sometimes it happens in 8.3 years. So to say it's 100% correct, I haven't seen the 100% of the time it's correct. I just don't see the correlation. But usually I can tell you within about 3 years, you'd have this big recession that everyone's worried about. What are the signs you look at for the recession, like the VIX, the yield inversion? Really, Ida, one of the biggest and what defines a recession is the GDP. And I'm paying more attention not just to the US GDP because we seem to be more worldly known, but the world GDP was taken down from 2.7 to 2.2, and European Union GDP just went from 2 to 1.7 to 0.9 to 0.7. So I'm trying to pay attention to the slowdown on a global level, and I spend time tracking and researching, which some of the sites that I'm getting some of these numbers from, I'm having a really hard time verifying their validity, but I'm looking at global GDP numbers. And it's really scary when Europe goes from a 2 or 2.1 down to like a 0.7 right now in 3 months. That doesn't look good. China's are going down from a 6.9 down to a 6. The world GDP number from 2.7 down to 2.1. Revisions are going to the downside right now, and that's where I'm looking at a global slowdown will definitely affect the U.S. Even if the U.S. doesn't necessarily go through a recession, it doesn't mean that the markets won't overreact. So good questions from both of you, Rick and Ida. Are there any other questions? If not, I look forward to seeing everyone tomorrow, 6 p.m. Mountain Standard Time. Trade findings and adjustments. Again, I've got another 2 or 3 I'd like to throw your direction. Going to give you 30 seconds if anything else pops in. Otherwise, I appreciate you being here. Have a good evening. Lee talked about Lulu. Lulu's having a hard time getting above 165. Had a great earnings. And if anything, if you look at a chart on Lulu, it seems to be filling the gap back to the downside. Now I'm saying that, and I'm bringing up my CNBC app. Yeah, Lulu finished at 165.52. Really fought through it through the day. And after hours, Lulu's already down 24 cents. So Lulu has had a hard time closing above 165. There are some sell orders there. It had an amazing earnings, and it's fallen down since that point. I believe I saw 178 on Lulu after earnings. Right now, currently sitting at 165, and has really struggled to hold the 165. It seems to be filling the gap back down the other way. So whoever typed in Lulu there, I don't necessarily see Lulu having that big upside potential, but that's because I've just most recently been introduced to them. I'm not necessarily trading Lulu. I just have a client that has short-putted too many shares of them. Let's take a quick look and see if they've had a big drop and some big upside. Kind of back up to 6-month highs and not holding them. Let me go out a couple years. Yeah, I think Lulu's doesn't necessarily have that upside potential. I don't see it. Ultra, excuse me, they also passed their multi-year highs, so not a big opportunity there for the two of you to put those two in. All right, I appreciate everyone being here today. If there are no more questions, I look forward to seeing you tomorrow. Have a great evening, and let's see if these markets keep going higher. Take care, y'all. Bye-bye.